All right. What is up, traders? What's up, tycoons? Super excited for today's video, giving you guys another update on Palantir, ticker symbol PLTR. This is another viewer request. I do these viewer requests every week, and we're going to break down how we absolutely crushed the bullish price targets, guys, since I started dropping these Palantir videos early May. You can see we actually exploded once we hit our demand zone here. And I mean, nobody could have seen this coming, guys. Over a 115% move. This is largely in part due to earnings as well as a gamma squeeze, okay? Now, I already made videos on the gamma squeeze, so we're not going to focus too much on the gamma squeeze today. What we're going to do is we're going to go over the possible bullish scenario and how Palantir could maybe even reach $18 here in the near term. All right. And we're actually back at historic levels that we haven't seen since December of 2020, guys. And we all know how crazy the market was back then. When we hit those levels, Palantir actually went up another 50%. So I'm going to actually break down what that is specifically in today's video. We're also going to give a shout out to today's sponsor, Simply Wall Street. It's a really amazing platform I've been using for a while, and I'm happy to have them as a sponsor. You guys can get a 14-day free trial and up to 40% off your purchase. Now, if you get the annual plan, it's normally about $250 roughly. And with the with my link in the description or the pinned comment down below, you guys can get it for around $100 to $144 for the first 100 people to join. All right, so make sure to use that. Simply Wall Street's a great platform. We're actually going to dive and focus a lot on some of the fundamentals about Palantir today, while also going over some of the short-term price action levels that we could see. Simply Wall Street does really great fundamental analysis and makes everything easy for you guys to understand if you're not a pro at fundamental analysis. And it also gives you some nice, colorful graphs to make it even easier and, just better for you guys to understand. So we'll break down all of that, go over their financial health, different things like that, some of their future growth, and lots of great stuff. The financial health is definitely by far the best looking part on Palantir, in my opinion. We're going to break that down in today's video. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Be sure to read through the full disclaimer, and we'll go ahead and jump straight into the video. And so we'll start off here, using the Simply Wall Street platform. Okay, they have an app and a website. Both of them are really amazing. And so from a risk to reward standpoint, we can see that some of the rewards are that it's trading at 48.7% below the estimate of its fair value. And earnings are forecast to grow 55.69% per year, and earnings have grown 12.3% per year over the past 5 years. Now, from a risk analysis standpoint, fundamentally wise, shareholders have been diluted in the past year. Now, when we take a look at the shareholder returns over the past 7 days, we can see that Palantir is up 5%. And in the past year, all right, Palantir is up a whopping 69%. Now, when you look at the return versus the industry, Palantir has exceeded the U.S. software industry, which only returned 16% over the past year, and it's also exceeded the U.S. market, which only returned 1.7% over the past year. Now, from a volatility standpoint, Palantir is a pretty volatile stock. We can see here that Palantir's volatility is higher than the industry standard and the average market volatility. So these volatility, it includes big upswings and also big downswings. So you have to prepare yourself and have some type of a plan when trying to invest in highly volatile stocks. Now, when you look at the share price versus its fair value, okay, based on its future cash flows, all right, using a discounted cash flow model, it appears that Palantir is still about 47.9% undervalued, guys, putting the fair value at about $29.68. So, still possibly lots and lots of upside room and potential when it comes to Palantir, even after this amazing and massive rally that the stock has done. I mean, the stock's up over 100% just in the past 20 days alone. Now, when you look at some of the future criteria checks, it does get a 4 out of 6, okay? They're forecasted to grow earnings and revenue by 55.7% and 15.9% per annum, respectively. EPS is expected to grow by 56.8%, and ROE is forecasted to be 10.7% in 3 years. Now, they're forecast to become profitable over the next 3 years, which is considered faster growth than the savings rate. They're also expected to become or to grow faster than the US market. All right. Now, one thing, though, you do need to be cautious of is that their revenue is forecast to grow slower than 20% per year. Now, some of the key information when you look at the earnings growth rate, we kind of already talked about that a little bit. But from the software earnings growth, we're seeing 20%, 15.9% revenue growth rate, and future ROE at 10.7%. Again, we kind of touched on this just briefly just before, but all of this is really nice and simply put together for you guys, so you guys don't have to deep dive through the earnings reports, using that Simply Wall Street platform. And as I mentioned, the financial health looks amazing. Okay. They have no debt right now. They get a 6 out of 6 on all the financial health criteria checks. They have a total shareholder equity of $2.8 billion and a total debt of 0, bringing that debt to equity ratio to 0%. Its total assets and liabilities are $3.7 billion and $879.9 million, respectively. Now, whilst unprofitable, Palantir does have sufficient cash runway for more than 3 years if it maintains its current positive free cash flow level. All right. So that's really, really good to see, right? They have diluted shareholders within the past year, all right? And there's always a risk that they could dilute shareholders a little bit more. But we see that the company isn't scrapped for cash, right? It's not like they only have 6 months left of cash. And once they run out of their cash, they're most definitely going to be doing, some shareholder dilution. From a cash runway analysis perspective, they look great right there. Okay. Now let's go into the charts. Now, as I mentioned, from the early May lows, all right, up to where we are now, the stock has gone up over 115% and absolutely crushed all of my bullish price targets that I had. Largely in part due to the gamma squeezing. Okay. The last gamma squeeze level was at $15, and we saw a really big push once we got above that $15 price level right here. You see that big wick right there was the gamma squeeze, and a lot of day traders and short-term traders like myself were able to capitalize on a lot of this movement. Now, I mentioned that Palantir is back at some 2020 levels. Now, you may be thinking that I was talking about dollars or prices, but I'm actually speaking of the RSI, your relative strength index. Take a look at this peak right here, in particular right here at 89.35. All right, when we were at this point, that was at this candlestick right here. And you can see from the top of this candlestick, the RSI actually went down, but the stock ran up another 50% afterwards, guys. So, really, really interesting here. We are extremely overbought, right? If we take a look at our daily chart right now, we're just below that 89.30-35 level on the RSI. So it would make sense, for Palantir to have some type of a pullback. Okay. Now, here's the thing is markets tend to move in 3-wave and 5-wave structures. And if this wants to be a bullish 5-wave structure, okay, we could see this thing come all the way up to 1873. Okay. Now, the bullish price targets specifically are 1720, 1783, and 1873. And that's only Palantir going up another 19% from its most recent highs that it hit just yesterday. Okay. So, as I mentioned, with the RSI extremely overbought right here and way above 70, which is the technical definition of overbought, it would make sense for us to see some type of a pullback. Now, that doesn't have to happen, but if it does, what I want to highlight is from a 5-wave bullish structure, all right, above these 3 levels right here, which are 1249, 1150, and 1051, we still have potential to go back bullish and end up hitting our bullish price targets to the upside, if not retesting our previous highs. Okay. So I'm not saying Palantir has to go all the way back down to 1051, but what I'm explaining to you guys is that markets don't move in a straight line up or in a straight line down, right? They move, you either get a move up, a retracement, continuation of that trend, or a move down, retracement, continuation of that trend. And this is why we're using the Fibonacci retracement levels here, okay? We have this massive move up, and we're looking to see if we do pull back and retrace, what levels are the key levels to pay attention to determine, are we going to continue that trend, or if you move up, retrace, consolidate, and break through those retracement levels, that's how you can spot a potential downside reversal, right? So if we move up, retrace, and we consolidate through here and break through 1051 and flip that to resistance from support, then that's ultimately when we could see a larger reversal in Palantir and potentially head back down to that $9,876 price range. Okay, keep in mind when it gapped up on earnings, guys, it didn't even gap up to 1051. I mean, the stock gapped up below $10 off of the initial earnings reaction. So, it's completely skyrocketed ever since earnings. And we're going to see what happens next, which is why, I tried to go over a lot of the fundamentals on Palantir, so you guys can understand a little bit more. And I do want to advise caution, as typically buying a stock when it's very overbought on the relative strength index is not always the best or most successful strategy, right? Typically, you want to avoid stocks when they are at those, extremely overbought levels. That's just a general rule of thumb, okay? It's not a guarantee that a stock has to fall or that you should short something or a guarantee that a stock can't go higher. As I showed you guys previously, last time Palantir was at these levels, it was on the RSI, it was extremely overbought. It did see a pullback, but it actually went much higher without even reaching the same levels on the RSI. So just a little bit of perspective for you guys. And we all remember how crazy things were back in 2020, okay, with the pandemic boom and the pandemic bull market. Right. It's really interesting to see some of these stocks. You look at Apple, you look at Nvidia making all-time highs. You have Palantir coming up to, showing signs of relative strength that we haven't seen back since the COVID pandemic. So, right now things are just extremely bullish in the market. Don't forget to use this today's sponsor, Simply Wall Street. There's a link in the description or a pinned comment down below. Remember, the first 100 people to join can get up to 40% off of the membership. All right. And you also get a 14-day free trial to try it out yourself, okay? So I went over most of the stuff on Palantir. What I want you guys to do is either look up Palantir, dive a little bit deeper, or look up one of your favorite stocks that maybe you don't own yet, maybe you want to own, and you want to see, is it a good value right now, right? Simply Wall Street is going to be a really great platform to help you guys do that and help determine, from a fundamental standpoint, maybe is this stock overvalued or undervalued? Could I potentially wait for it to drop back down to a fair value? Or is this thing trading below fair value? And could this potentially be a good arbitrage trade to try and hold until it reaches fair value at some time in the future? I appreciate you guys watching. Smash that like button, subscribe to the channel for more, and I'm out.